Alphabet reported that in its latest quarter, sales increased by 12% to 97 billion, while the company was able to keep costs under control. In this video, I'm going to dig deeper into the company's latest financial results and discussion about why the company's performance was the way it was, and talk about some decisions that Alphabet made 2 years ago that are starting to pay off today. And I'll remind everyone of my buy recommendation and rating of Alphabet stock here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Alphabet saying that consolidated revenue of 96.5 billion was up 12% in the most recent quarter. And here's the important part. Its search business remained the largest contributor to revenue growth, followed by the cloud. And the reason why I say that was really important is because the search business and its risks by artificial intelligence and large language models, that's the reason why Alphabet stock has remained sort of flat as the AI trade has gained momentum. Investors are concerned about the risks to Alphabet's search business. So I'm watching this segment very closely every quarter as the company reports results. And so far, it's been several quarters now since the launch of ChatGPT. Search continues to grow and it continues to contribute to Alphabet's bottom line results. Now, that doesn't mean that it's still not under threat. The competitive advantages that search had prior to the launch of these large language models is certainly diminished. It's no longer as safe as it was, before 2023 or before 2022, the end of 2022 when ChatGPT is launched. But it's holding its own, and Alphabet has made adjustments to its Google search, infusing it with artificial intelligence itself to become more effective and regain or retain a lot of those search activities that they held before the launch of ChatGPT. Of course, I just wanted to remind everyone, as I do in almost every video, that Alphabet is one of my top stocks to buy right now. It's on my list of top 9 stocks to buy right now. I've had it on the list since January as a top 9 stock. In 2024, I had it rated as my top stock to buy all year. And it did well in 2024. It was up considerably more than the S&P 500 index was up, so it outperformed the index. It did really well. And this year, I still have it as a top 9 stock, but I replaced it in terms of the top stock. As you can see, Uber is now my top rated stock to buy in 2025. And my intrinsic value per share calculation for Alphabet has it worth $238. The current market price is $184. So what has impressed me lately with Alphabet is that it's kept its costs under control. Total operating expenses actually decreased in the latest quarter to 25 billion. Decreased when revenue increased by 12%. So that's impressive. And this is a result of, if you remember, in late 2022, early 2023, Alphabet went and took a massive cost-cutting campaign where they laid off tens of thousands of employees and they reduced their office space in an adaptation to how the company operates now. They don't need as many people. They were being wasteful. And then also, since they don't need as many people, they didn't need as much office space, especially while they're letting go of people. They're also not having people come into the office as much. They're not completely remote, but they are offering more flexible work options. And so longer term, Alphabet was also buying up and building up real estate and office space in anticipation of what they were going to need, 5 years from now, 10 years from now, right? They were trying to get ahead of the curve there. But now that change has happened, right? More remote working possibilities, they shrunk their ambitions for office space in the long term, which is really good news for investors. I been saying that every company needs to have some kind of remote working strategy. I understand the value of having people come into the office, and you do need some of that. I don't think you can be completely remote, but you can incorporate some remote working and reduce your office expense by having some kind of remote working strategy. It also allows you to attract people from different parts of the world where you may not have a physical office presence. So I've liked what Alphabet has done in recent years in controlling costs. I've long felt that they've been a little wasteful in their cost management, and that's understandable, right? And let me explain why I mean why it's okay that they've been wasteful. It's not that I support companies that are wasteful. That's not the case at all. But remember, you tend to focus on your primary need as a business owner or as a manager of a business. So when you're operating a business that's in growth mode and it's been growing rapidly for, it's been 2 decades now. Alphabet's growth has been, you know, over double digits every quarter. That means it's adding billions of dollars of revenue every year, adding new businesses, expanding into new categories. That's your primary focus, right? Your focus is on growth. And if your business is always in growth mode, you don't really have an opportunity to focus on costs, right? Just think of yourself. Like if you've been employed for, 10 straight years without any gap in employment, and you haven't had any layoffs or any kind of job switching, you haven't really had time to focus on your costs, right? But let's say you get laid off and you've been laid off for a couple of months. During that time when you're laid off, you probably take a look at your household expenses and you look at where you can optimize, you look at where you can save costs, you look at where you can upgrade technology at a lower price. And so that's when you start to think about those things when you're not focused on meeting demand as a business, right? Or as an individual or a household. And so that's why Alphabet had been growing and had so many opportunities for so many years. It hadn't had time to focus on the cost side of the business, to control cost, to optimize their cost strategy, and to get their household in line. But in late 2022, they had that moment. They had that moment to focus because the central bank increased interest rates so rapidly that slowed down growth opportunities, and that gave Alphabet a moment, some breathing room to focus on that. And they did. And I think they did a relatively okay job. I thought they were a little too generous with their severance packages when they let go of a lot of the employees. But overall, I thought, and the results are showing, that they did a pretty good job of controlling costs in that moment when they had that brief opportunity. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.